The U.S. has lifted sanctions on some types of Iranian oil amid a sharp rise in energy prices. The U.S. has lifted sanctions on some types of Iranian oil in an attempt to contain the impact of the war in Iran on energy markets. Treasury Secretary Scott Bessent announced a narrow, short-term permit for the sale of Iranian oil currently at sea. This move marks a stunning reversal in long-standing U.S. policy, and its implications are highly uncertain. Oil and gas prices have risen sharply since the war began. Brent crude is hovering around $112 per barrel, up 53% over the past year. The price of gas in the UK, which was 80 pence per therm before the crisis, is now hovering around 151 pence per therm. Experts said the move would likely have a limited impact on prices and could increase the flow of funds to the Iranian regime, which is under attack from the United States. Bessent said Friday that the waiver applies to the sale of Iranian crude oil and refined products currently on board ships. The waiver will be valid until April 19th, the Treasury added. The Treasury Secretary said the move would allow about 140 million barrels of oil to be quickly delivered to global markets. Before the war, China was the main buyer of Iranian oil, buying it at a significant discount due to sanctions imposed by the United States and other countries. Bessent said Thursday that lifting restrictions on oil sales could help redirect much of this supply to other countries in need, such as India, Japan, and Malaysia, while forcing China to pay the market price. Bessent, in his article on X, claimed that Iran would have difficulty accessing revenues from Iranian oil purchases, and that the U.S. would continue to apply maximum pressure on Iran. However, David Tannenbaum, director of Blackstone Compliance Services, a consulting firm specializing in maritime sanctions, said on Thursday that the idea was insane. "We're essentially allowing Iran to sell oil, which could then be used to finance military action," he said. Experts have warned that lifting the restrictions would not have a significant impact on prices. "I don't think it would fundamentally change the situation, and that raises a lot of questions," Rachel Ziemba, a senior fellow at the Center for a New American Security, a think tank, said on Thursday. Ziemba said she believes the U.S. would not want money from oil sales to go to the Iranian government, but that preventing it in practice could be difficult. The scale of the supply crisis clearly puts the U.S. government in a situation where every barrel of oil counts. They are looking to find additional oil reserves wherever possible. The Trump administration's temporary lifting of sanctions on Iranian oil also drew a positive reaction from financial experts. Former World Bank President David Malpass said the move was a narrowly targeted action that should put downward pressure on oil prices outside of China and should reduce Iran's oil revenues and undermine its military power. In a post on X, he added, "This is one of a number of steps taken last week, including waiving Jones Act requirements, opening pipelines, and building refineries that will benefit the U.S. and increase long-term energy supplies." The U.S. has already taken other measures to increase supply, including releasing millions of barrels of oil reserves and suspending some sanctions on Russian oil last week. The second decision sparked a significant backlash from European leaders, who said it would strengthen President Vladimir Putin's regime and prolong the war in Ukraine. About a fifth of the 100 million barrels of oil consumed globally daily is typically transported through the Strait of Hormuz, which runs along part of Iran's coast. However, with the outbreak of war in late February, shipping through the strait ceased. While some barrels transported through the strait were successfully rerouted, experts still believe the war has deprived the market of approximately a tenth of global supply. Concerns have grown as retaliatory attacks on a key gas field being developed by Iran and Qatar raise the risk that fossil fuel supplies could be constrained for years, even if the conflict is resolved relatively quickly.